Welcome to The Point of View. This is your favorite current affairs show on television. The Point of View usually interviews people, but every now and again, we bring you editorials and analysis of important issues. The Ghana Cedi has been struggling against its major trade partners, whether it's the US dollar, the British pound, or the euro. And tonight, we're going to show you how poorly the Cedi is performing and try and understand the factors behind that poor performance within the next 50 or so minutes. Stay with us. Welcome back. So there are many ways of analyzing the performance of an economy: the GDP rate, inflation rate, debt rate, and other things. Deficits are also important. But we've been told, and many people believe this to be true, that the exchange rate is a very important indicator. In fact, Dr. Baumia, the current vice president, said if the exchange rate or if the fundamentals are weak, the exchange rate will expose you. And he's right to an extent, because for a small open economy like Ghana, our exchange rate is a very important indicator of what happens in our economy. Ghana Cedi is selling at the FX market at 14.90 cedis. In some places, 14.8, even 14.25. Clearly, there's a challenge. What is behind the latest slump in the Cedi? What can be done to stem it? That's what we're trying to examine. We'll do it in 4 ways. We will start, obviously, with the FX indicator, which is the exchange rate between the Cedi, particularly the US dollar. We'll also look at the monetary policy rate. The central bank announces this rate to try to control inflation. We'll look at its behavior for the past 2 decades and glean some insight from what that tells us about where we are as an economy. We'll also look at inflation, because inflation is probably the worst crime against incomes, because it reduces your purchasing power and makes everything more difficult. We'll talk about the rate of inflation over the past 3 decades and its relationship between the exchange rate and interest rates. Then we'll show you what we call the composite index of economic activity. That's really productivity of an economy. If the top 3 are bad, the bottom doesn't do well. So those are the issues. But to make this interesting, I'm going to start with a conversation around exchange rates since redenomination. Because in 2007, the government of Ghana decided to redenominate the currency because we were close to 9,000 cedis to the US dollar. And after shifting 4 zeros, 10,000 cedis to the dollar became 1 cedi to a dollar. Now, this is a very important place to start the discussion from, because that tells you that even though it was 1 cedi to a dollar, the currency really still was depreciating. Because prior to the redenomination, if the cedi was selling for 8,000 or 9,000, the redenomination only made it 0.8. It knocked off 4 zeros, but the overall trajectory of the currency was still very poor. Be that as it may, we are going to use the 4th Republic president after Rawlings. So J.A. Kufuor, after redenomination, is where we start from. Now, J.A. Kufuor left office on 7 January 2009. But for analyzing the exchange rate, we are using year end, or where we are. So as of the end of the year 2008, you could get $1 for 1 cedi, 30 pesos, or 13,000 old Ghana cedis, to make it easy for you. So this is what Kufuor left Mills before he handed over to him in 2009. Now, when President Mills came into office between 7 January 2009 and, of course, when he unfortunately died in 2012, he left us a currency exchange rate. So you could say that the last 6 months of his administration, President was Mahama. Be that as it may, Mills was the president. The currency was now 20,000 cedis to the dollar, old Ghana cedis, or 2.08. This is very important. So even though it's like 1-to-1, such a great discussion. In fact, I feel like the media failed the country because the redenomination was explained to suggest some achievement for the economy. But the overall trajectory of the exchange rate, as we will show you, has been in decline since records started. Anyhow, Mills left us with a 2.08 to the US dollar. Now, the most important thing to look out for is what this means in terms of relative performance. I'm using presidents to signify eras, because the crisis and the things that drove the currency exchange are not necessarily peculiar to presidents, but it's a very important thing to show. So between the time Kufuor left office and the time Mills left office, the Ghana cedi had lost, or you can say, had depreciated by close to 60%, right? So 1 cedi and 3 or 30 pesos was how much you bought the dollar. By the time Mills left office, you needed 2 Cedis to do that. So that's a 59% or 60% reduction in value. That's a very important thing to do. We're going to use this to analyze the rest of the terms. So, Mahama takes over July 2012, wins the election in December 2012. All right? So we can say he's handed a 2-to-1 USD. Where does he leave us? By the time he leaves office, so this is supposed to be 2016. By the time he leaves office in 2016, he's leaving us with 4.5. 4.5. Right? This is very important. So he takes over 2012 and leaves us in 2016. And the dollar rate that he leaves us with a reduction of 120% compared to the one he inherited. So this is serious, right? So you have the Cedi could be buying a dollar at 4.5, Mills 2.0, Kufuor. But mind you, all of this is 13,000, 20,000, 45,000 old Ghana Cedis. So your dollar is still strong, your Cedi is still weak, but for sake of argument, redenomination zeros have been reduced. So from Mahama to so this is supposed to be 2016. From Mahama to Mills, 120%. Now, this is the period, this 2016, 2014, 2015, this is where the major crisis occurs for the government. The energy crisis, the Doomsor crisis, there was also a fiscal crisis. All of that contributed to this situation for the government. So, more than double of what you needed to pay for the dollar under Mills was what you needed under Mahama. All right. So Bawumia and Akufo-Addo come into office in 2016. And in their first term, what do we see? Very good. 4.5 to close to 6. So you could buy the dollar for 5.9 or 6 Ghana cedis for the dollar. Now, that's not that bad. That means that the currency, it still fell. 30% is still a lot. But if you compare that to these two, you are like, well, this is not too bad. Don't forget that these guys came into office based on this poor performance. So in their first term, so this is supposed to be 2020. In their first term, this is year end. In their first term, this is what we have, 5.9. So you can say 6 Ghana cedis to the US dollar. All right? Now, this is where it gets interesting. So from 2020, you have COVID 2020, and then you have 2021, 2022. Currency begins to struggle. Russia-Ukraine war, all of these things they talk about. Now, what you needed 6 cedis to buy by the end of his first term, we have not even ended the second term. Today is 15th May. It's selling in some places at 15, some places 14.95. Let's, for sake of argument, say even just 14, 6 to 14, right? So Mahama left us with 4.5. Akufo-Addo took it to 6, and now it's close to 14. The year hasn't ended, so you may not analyze it. But if you continue in that logic of thinking, it means that the fall is now big. So this is the worst of that. So there are many ways of analyzing this, right? 120% dip in the value of the Cedi. Now you have 141. So this is terrible. You can say the year hasn't ended, so let's wait to see how the year ends. So we'll use a different way of calculating it. But these are very important numbers to look at in trying to understand where we are. And I think it's much clearer here. So you have 1 Cedi, 30 pesos under Kufuor, 2 Cedis under Mills, 4 Cedi, 50 pesos under Mahama, 5 Cedis, 90 pesos under Akufo-Addo 1. Now we are at 14 Cedis, 25 pesos. 14 Cedis, 25 pesos. So that's a big challenge. We need to work on that. That's a big, big, big challenge. What is the cost? Now let me show you this in a different way. All right? So let's put all of this together in a way that makes sense. In 2022 January, it was still around 6. Right? Don't forget, we said that by the time Akufo-Addo leaves office, I'm taking you back just to make this point. See, around 6, this is his first term, 2020. COVID comes. 2021 is post-COVID. 2022, he's still around 6. So he's still doing pretty well. 2022 January. So when I come to 2022 January, right, 2022 January, it's around 6. Okay? It's not that bad. It begins to decline all the way till August 2022, right? And then by November, it hits 14. So what started, so the dollar's price of 6, January of 2022, very similar to when it takes over in a second term. By November of that year, it's 14 cedis. So this is where the problem is. Again, it's much clearer here, right? So if I'm just using my height, okay, January of 2022, you are buying the dollar for 6. By November, you are buying the dollar for 14. Okay, and it's that way till December. Somehow we had there was a dip to around 10 for Christmas. All right, and then it sort of rises again and hovers around the 12 figure for a long time. So the average from December 2022 all the way through last year, it did come to a bit of 10.5. So, for example, we are in May 2024, right? As of May last year, it was around 10.9. So 10, 11, 12, 10, 11, 12, 10, 11, 12, 10, 11, 12, 10, 11, 12. But look at where we are now. We are back to 14. So why are we doing this program? This 14 has been the most expensive we've bought. Nobody has bought a dollar for this in Ghana since record started, right? 14.75. It's a record high. Now, where are we now? We are back to that level. This is why this is a very serious situation we are in. All right? This was post-COVID. COVID crisis, Russia-Ukraine war, the rest of it. Somehow, something happened here to bring it down. Now, when did Ghana go for IMF? Around this period. So some would say the IMF, the hope of IMF brought it down. But then it went back to its normal level. Okay, then it begins to rise. Now look at where it is now. Now I put an asterisk here because there are different ways of doing this. You can use the interbank rate, the average that the BOG gives, which is slightly below. But today being Wednesday, if you listen to Neil Latte on the City Breakfast News, he says the average FX rate for the dollar, or the average exchange rate for the dollar in a Forex bureau is 14.85. So that's what I'm using. Now that's higher than what happened in November. So we're actually back at 2022 November level of seriousness. And the worst part is that this is not even over, right? This was a peak. We don't even know whether this has peaked. Okay, so what I'm telling you is that you could buy the dollar under Kufuor for 1 cedi and 30 pesos, under Mills for 2 cedis, under Mahama for 4 cedis, 50 pesos. Akufo-Addo first term for 6 cedis. He hasn't ended the second term. You need close to 15 cedis to buy the same dollar. Now, that's crazy. That's crazy. Now, let me show you using the interbank rate. So what's the interbank rate? The Bank of Ghana looks at, okay, so banks trade currency. So if somebody sends a remittance into the country and the bank may need dollars to pay you or to do other transactions, international transactions, banks buy and sell dollars among themselves. So the average rate they give each other will be lower than the average rate you will get it because banks buy higher volumes. Now, if I need dollars to pay maybe for an exam, I may need $200 or $500 or to pay for a mortgage. A bank may need $200,000, $300,000. So the higher the volume, the lower the rate. So the interbank rate is typically lower than the Forex Bureau rate. That's why if you go, so even though the interbank rate I'll put on the screen, right, this rate is 13.7. You won't get it for 13 because you're not a bank, you're not big enough. But even this 13 is still the highest ever recorded as on the interbank. So we're saying that where we are now, since record started, so this is since 19 Kojohoho, right? This is not Kufuor. This is since, because if you look at the chart for the currency since we started trading, it's always been depreciating. And there are structural reasons for this. The redenomination just changed the numbers size so it can go on our paper, but it's the same thing. So for example, this 13, add 4 zeros to it, right? So it's what? If you add 4 zeros to it, it's 137,000. So what you used to buy for 10,000 before Kufuor, you need 137,000 cedis to buy $1. That's what it is, because it's 4 zeros. It's 13.720. So move it 1, 2, 3, 4. 137,000 cedis. So we need to make this clear that the cedi dollar thing is a massive thing. And we've been told that of all the economic indicators, GDP growth, GDP per capita, inflation, the deficit, all of the rest of it, this is the most important thing. Why? Because for whatever you want to do in this country, most of our inputs are imported. So for example, you want to start your own company, you need to buy a generator. You don't manufacture generators in Ghana. The generator is dollar denominated, so you buy a $20,000 generator. Now, if you wanted to buy that generator in 2022 January, you needed 6 cedis for $1, right? So that's 6. Let's say the generator is 10,000 cedis, right? So let me go back. So this is interesting. So here we are. Now, if January 2022 you wanted to buy a generator and it's $10,000, you just need times 6, 60,000 cedis to buy the generator. Now, let's assume you need to buy another generator to expand your company. By November of that year, you needed 140,000 cedis to buy the same generator. May of last year, it was 10.9. You needed about 110. Today, if you want to buy that generator that you bought for 60,000 cedis, you're going to buy for almost 150,000 cedis. Now, that drives inflation. So because it's the same generator, same size. Now, if you need 150,000 to buy something that you bought for 60,000 just a year and a half before, you also add to the price. Or let's make it even interesting. You went to borrow money to buy the generator. You came to me to take $10,000 from me. You needed 60,000 cedis to pay me for the generator. Now, even if you haven't finished using the generator and you are going to pay me and we are spreading the payment, by the time you finish paying me, you need 140,000. So the rest of the dollars you need to buy is going to be more expensive. That drives inflation. So this is a serious issue. Car importers, anything you need to buy from abroad, if you are buying a car, today I interviewed a gentleman from the car dealers. He says a Vitz, they buy it from Dubai. It used to be 60,000 cedis for the Vitz. It's now 90,000. The Vitz price hasn't changed in Dubai, but now you are paying 90,000 for the same Vitz because of this. So this is the issue we are dealing with on this. Now, so the interbank rate is much lower, but whether it's the interbank rate you're using or the rate at the Forex Bureau, we are not in a good place. Now, if you can I have a chart from Blackstar. Blackstar is an investment firm headed by some very smart Ghanaians. And they said since redenomination, the Ghana cedi has lost over 92% of its value. All right? Since redenomination, the Ghana cedi has lost over 92%. I wish you could show that for me. Over 92% of its value. That is crazy, right? 92% of its value since redenomination. That is just incredible. Yeah, here you go. So this is from Blackstar investment firm, some really smart guys. Ajay Boateng did a presentation, and I borrowed this from him. Now, Ajay Boateng is saying that redenomination is 2007, right? So 2007, the value of the cedi has fallen and fallen and fallen and fallen and fallen and fallen all the way. The cedi is almost worthless. It means that if you had 10,000 cedis in, 2007, at the time, that 10,000 old Ghana cedis, what is it? It's worth probably 1/9 of what it's supposed to be worth. This is serious, right? This is very, very serious. It's a serious situation. So look at that. And again, look at the steepness of the loss of value. So this is 2008. Kufuor left Office Mills to Mahama, somewhere here, 2012. Mahama brings us all the way here. 2016. And then now, this is Akufo-Addo's first crisis, and it's taking us further down. So that's a problem. That's a major problem, all right? Now, I'm going to talk about the monetary policy rate, but I want this to sink in a bit, all right? There are a few other things I would say on this before I move to the monetary policy rate. So you could say that every government has had a major crisis. So maybe let me go back and just do this quickly. So every government has had a major crisis, all right? And I'll explain it this way. So between 2008 and 2012, we had fiscal crisis. We also had an energy crisis. Now, in Akufo-Addo's first term, we had a banking crisis, and now we have a debt crisis. So my point is that everybody has had an issue to deal with, all right? So you had an energy crisis here, energy crisis there, fiscal crisis here, banking crisis here, and then you have a debt crisis kicked out of the international market crisis. Now, the reason 2022 is a very serious year. Let's look at, for example, how the rating agencies treated Ghana, or have treated Ghana for the past 20 years. If you can put that up for me as well. So you notice that 2022's November, this high figure and all the challenges with the currency manifest itself in many things. Weak fundamentals. Debt to GDP is over 90%. Okay? Then you also have to deal with the issues of large deficits. All right? And then your debt. So there are the 3 Ds of bad economic management. Debt, deficit, depreciation. Those are the 3 Ds. Debt, deficit, depreciation. All that led to a downgrading. I don't know if you have that chart to show from the Black Star people, where they talk about how since record started, since record started, we've never had a period where we've been downgraded to almost junk status when it comes to our credit rating. Look at that. So 2022, everything goes all right. All the 3 rating agencies, Moody's, S&P, Fitch. Now look at it. Again, this is thanks to Black Star. The lower the rating, so this is like junk status, and this is good. All right. Fitch upgrades Ghana to B+, positive outlook. 2003, when we went to Hipik, Kufuor, all the way to 2008. Not bad, right? So the green line is Fitch. We had a bump in 2014, energy crisis, Mahama. All the way. Now look at where Fitch has brought us. Boom. Down to junk. S&P, Standard & Poor's, again, doing well, goes volatile, comes down under Mahama a bit. Under this 2022 buying, we are down. And then Moody's, the blue, same thing, volatile. So Ghana suffers 10 downgrades in 2022. This same thing coincides with the currency, coincides with your debt, coincides with your deficit. Everything was unraveling in 2022. That was why we can excuse that 14. But now we are in 2024, and you're still back to record levels. This has to be checked. Now, let's talk about the next indicator, MPC, monetary policy rate. Now, this is basically the rate the government gives, the central bank gives, when it wishes to, essentially, the rate that banks give to each other when they lend to each other, right? It's a monetary policy rate, or they call it the indicative rate, all right? Now, how does this work? It's a central bank issue, the Monetary Policy Committee. They use this rate to try and control inflation. So the assumption is that if there's too much money in the system, if you raise the interest rate, people will go and save. So they'll put their money in the banks, and they won't spend that much. So it mops up what they call excess liquidity. That's what they're trying to do. Now let's see how this works. 2002 to where we are. The rate was around 27, come down. The average is about 18.5%. Now, let me show you the key issue here. Now, this is the rate the central bank charges commercial banks for loans. Since 2002, the average rate has been 18.5%. I'll explain this shortly. Now, this is my issue. We are close to 30%. And this is the highest since 2002. So we are saying that the fundamentals are weak. It's not just the exchange rate. The higher the interest rate, the bigger the problem. Now, why is this a problem? When the interest rate is 29%, the average lending rate for the same period is about 32 or 33%. Because if the central bank will lend to a bank at this, the bank will lend to its best people at this plus maybe 2 or 3. So if you go to a bank to buy that generator, you want 60,000 cedis to buy that generator, you are paying 33% every year as interest. So whilst you try to control inflation with your monetary policy rate, it crowds out private sector. That's what they mean by private sector crowding out. So you can get access to a loan. So you want to expand your farm, you can't go and borrow because there's no business you do that you have to pay 33% every year. It doesn't make sense. All right? So where we are is probably the worst since 2000 because, the chart speaks for itself, right? It went up again. Don't forget Doomsor 2014, 2015, 2016. But then look at where you are with that. All right? So this policy rate is also not helping because access to credit, you don't have access to credit. So your exchange rate is high. Now you go to bank to borrow. Your interest rate is also very high. When we come back, I'll talk about inflation. Because those three rates are related. Exchange rates, interest rates, and inflation. Those are the three rates to look out for. Then I'll also talk about the 3 Ds, debt, deficit, and depreciation, the relationship. We'll look at what is driving the latest fall in the Cedi and what can be done. This is the point of view, special edition, trying to explain a few things to you on the currency exchange rate. Stay with us. Welcome back. So the point of view tonight is more like an editorial on the Ghana Cedi, selling close to 15 cedis. Is the most expensive since record started, and I'll show that with a Bloomberg story shortly. Let's read that. So this is just 3 days ago. Ghana's Cedi weakens into historic decline versus the dollar. Now, they give the reason. Let me just read. It says that Ghana's Cedi is in a record-breaking weakening cycle. The currency hasn't gained versus the dollar in the past 22 trading sessions. The longest streak, according to data compiled by Bloomberg, going back to 1994. So this is serious. Now, the Cedi traded 0.3% weaker at whatever time. It declined 14% this year, a slump beaten only by currencies that have been devalued. Now, the pound and the Nigerian naira have been devalued, so their slump is understandable. Go to the next slide. Now, it tells you of course, I just showed you a different version of this, right? So, Ghana Cedi is on a record losing streak against the dollar, so it's close to 14. This is May 9, so it's gone higher. Now, this is the important thing to look out for. The slide has been fueled by a slump in cocoa earnings. Last month, we did an editorial on cocoa, and we told you that we had already sold cocoa that we haven't finished producing. And we are going to need cocoa to give for cocoa that has been paid for. So our exports have dropped by nearly $508 million. Cocoa, gold bring dollars, which supports our reserves. And that helps to show up the currency. Because if you're going to buy that generator and you go to a bank, the bank needs the dollars from the central bank. The central bank doesn't have dollars. You don't have the dollars. If you don't have the dollars, it means that the price of the dollar keeps going up because we're all demanding the same. So when we sell cocoa, when we sell gold, we sell timber, the reserves are supposed to be kept in the central bank. Then people can get the dollar to do what they want to do. So Bloomberg is telling you that exports dropped by nearly a third in the first 2 months of the year due to adverse weather disease. We explained this already. Despite a temporary surplus in 2023, Ghana's historical current account deficit is also resurfacing. That's the second D. Depreciation is the first D. The second one is the deficit. Basically, you spend more than you budget. Joe Jackson spoke about this on the Citi Breakfast Show this morning. Now, because of election years, people are worried about the deficit. Now, I'll show you something. Our deficits are higher every election year, and so are our depreciation rates. The Cedi depreciates on average 16% in election years and 12% in non-election years. So there's a pattern there. 2024 is an election year. So analysts are saying that based on Ghana's historical track record, the deficit is going to go higher, the currency will depreciate more, and therefore, according to these strategists, the expectation of a higher deficit is worsening the currency's outlook. Go to the next slide and I'll come back. So they use what they call forward calculations. Now, this is a key point. Those who are doing the forwards are saying that the Cedi will sell beyond 14.6. This was the November figure per dollar by the third quarter. So by August, in fact, they are saying that we'll end the year at close to 16. According to the analyst prediction, the Cedi will end the year at close to 16. Based on that, they also talk about we haven't finished our debt deal, right? That's not done. We are still paying our debts. Domestically, we had a debt exchange, but foreign debts, we've not finished. And then they are talking about an increase in demand for imported goods ahead of the election. So this is Bloomberg, Moses Mozart, my good friend, and Monique. So the point they are making is that this Cedi exchange rate is going to get to 16. That's their prediction. We bind it in Jesus' name. But as we have been told, it's not just binding. You have to do certain things in addition to the binding. But that's the point. Now let's go to inflation. Let's talk about inflation. Inflation is a serious problem in Ghana as well. All right? I'm starting from 1965. So we know that we are all learning, right? We don't want to make it look like we are just trying to do politics of comparison of government. So this is year-on-year inflation. So year-on-year inflation is the rate of increase in prices. No, I don't need this here. Okay, this is good. This is good. Hold on, this is good. This is just to show you that the worst year for the Cedi has been 2022. Prior to that, 99. Prior to that, 2000. If what 2024 is doing is anything to go by, 2024 will be much worse than 2022. So 2024 will probably take over from 2022 in terms of the rankings of ignominy. This shows you the depreciation. So 2000 was our worst year of depreciation. This is Rawlings. This is also Rawlings. This is Akufo-Addo. And 2024 is also coming. This is Mahama. This is Kufuor. It's coming that way. So thank you for this one. This is Black Star. Great job, Black Star. They are great guys. Solid. Thank you for this. Now, let's come back here. Inflation, since record started. Look at that. Boom. Let me do it again so you see how it works. Inflation. All right. Now, take note of these years. 50% is the midpoint I want to use in this analysis, right? The rate of increase in prices. Okay. Now, check this out. 2022, inflation was around 54%, okay? Good. Aside from this 54% inflation we had in 2022, the last time inflation was this high, 1995 under Rawlings. Look at all these years. 76, Achampong. 77, Achampong, Akufu. Liman. Rawlings. To Rawlings. We haven't had this level of inflation that we had last 2 years, ever. Now inflation is around 24%, 25%. But this should tell you that this thing is crazy. Where we are is not good, right? This is crazy. Because look at this. These are all cool years, right? Frequent changes in government, Operation Feed Yourself, all these crazy times. This is hyperinflation. So if inflation goes above 50%, it's crazy. And we went there in 2022, right? So inflation, interest rates also, that 29% higher since 2002. And then your depreciation of currency also higher. So they are related. So the point is that your exchange rate going down is not in isolation. Everything else tells you that you're not in a good place. Your inflation is bad. Your interest rates are high. Your deficit is high. Your debt to GDP was 90. But look at this. Right? But look at some of these numbers. 1983. This was when there was famine and there was drought. This was when Ghana went back to IMF. This was terrible. Inflation was 130%. 1981, the year I was born. Look at inflation. 1977. Even 1980, right? So this is terrible. All right? Now, the high government spending and trade imbalance in 95, among other economic factors, led to the inflation we see in 95. And now, this 2022 inflation, it reached 54%. A weak currency was the main cause. Rising fuel prices, external shocks, among other factors, contributed to the high inflation rate in December 2022. So, your inflation behavior And by the way, the higher the inflation of a country, the more likely it is to have a weak currency. So the risk between inflation and a weak currency is that generally, countries of lower inflation generally have more stable currencies, and countries of higher inflation have less stable currencies. Again, generally, countries with higher interest rates generally have have higher inflation, and countries of low interest rates have lower depreciation. So depreciation's relationship with inflation is direct in many cases. So I'm just telling you that it's not just the currency. This thing is not good. Because if you have inflation of 50%, the rate at which prices are going up, it means if you earn 10,000 cedis, the value of the 10,000 in dollar terms, when it was 6 to the dollar to 14 to the dollar, it reduces drastically. The value of what that 10,000 can do under inflation when prices are rising is also halved. And then the amount of loan you can get to support yourself based on the interest rate is also high. So on the exchange rate side, you are suffering. On the inflation side, you are suffering. And on the interest rate side, you are suffering. So that's not good. So the point is that your interest rates, your inflation rates, your depreciation are all showing that your fundamentals are weak. What are your fundamentals? Let's talk about fundamentals. These are the key macroeconomic variables. And I want to thank Tesla Capital for this. So GDP growth rate, inflation rate, depreciation, debt to GDP, international reserves, policy rate. This is what I showed you in my second series. This is what I showed you in my first series. This is what I'm showing you now. So I picked this policy rate, I picked depreciation, and I picked inflation. These are the things I'm showing you. The other fundamentals are growth rate, how well the economy is growing. I'm going to show you that shortly. Debt to GDP and the gross national reserves. Now, let me explain each of them quickly. Your growth rate is how quickly your economy is growing. Easy to understand. Inflation, rate of increase of prices. See depreciation, we've spoken about that. Debt to GDP, if you put all your debt together compared to GDP, where are you? International reserves is basically what your central bank has in its vault to back exports, and then your policy rate. Now, why are the fundamentals weak? In 2022, inflation was 54%. I just showed you that. 54%. That's terrible. Your currency depreciated by 30%. Look at your debt to GDP, 93.3. That's weak fundamentals. Now, the argument is that we are back at 2022 levels because these things, the real things that have to change haven't really changed. All right? So your growth rate hasn't really changed that much. Your inflation rate has come down to 25%, but inflation is not the lead indicator because your depreciation, which you were hoping, look, it was 27, which you were hoping to bring down to 6, is back to 2022 levels. So even though your debt to GDP ratio has come down, it's an artificial reduction. Why? Because the reduction is because of inflation. Inflation has increased the size of your economy artificially, and when you compare it to the debt, the ratio is lower. But on real terms, your debt is still the same. You haven't paid any debt because for the past year now, you haven't paid anybody their debt. So the fundamentals is not just the number 69. Because of inflation, your debt to GDP ratio has come down because you are trying to inflate away the debt. Because it's just an equation. You owe 1 billion. Your economy is 1.5 billion. Inflation makes the size of your economy bigger. So you think that, oh, the 1 billion out of 1.5 is now 1 billion out of 2 billion. So this number has reduced, but that doesn't mean you've reduced your debt. So this fundamental is weak. Gross international reserves, look at that, 0.7. So 7 months. And then your policy rate was 27. Your long-run targets, you've not reached anywhere. So even in 2024, all these numbers portend weakness. Yes, the IMF has given you some money. So that has given you some money to cool off. So essentially, the currency's respite that we saw in the previous slide was purely because the IMF gave us some money. It wasn't because much had changed, which is why the currency is going back to its original state. Then the cocoa issue is also coming up. So the IMF money was the first respite. The second respite was that the government is borrowing a lot using treasury bills. Treasury bill rates are around 30-something%, which in itself is a problem. Because people who were giving haircuts, they reduced their expected rate of money they invested to like 19%. And the tenor was increased sometimes to 10 years. Yet somebody goes to borrow for 1 year or government borrows from somebody for 1 year and is paying the person 33%. Basically, what the government is doing is that government is incentivizing short-term thinking. So instead of doing long-term, in every normal economy, the longer the tenor, the higher the return. All right? So if I'm going to give you money for 10 years, I'll expect a higher rate than if I'm going to give you money for a year. But in Ghana, the treasury bill rate is above 30-something%. So if and treasury bill is 365, 181. So basically, I lend to government for a year, and the government gives me 33% within a year. Somebody lends to government for 10 years and is getting 19%. That's what you've done. So what does that? It inverts the yield curve. So you're going to have a recession. So we are not out of the woods yet. Yes, inflation has reduced, but that inflation has this inflation has just artificially reduced this figure. And I'll show what all of this means when I come back, because I'm going to now show you what this is showing for growth. Right? And economic growth is very critical for our return to normalcy. A lot of economics, I hope, is making sense so far. So when we come back, we'll talk about the real composite index of economic growth. And then we will conclude with a couple of quick suggestions. It's not just to criticize. We also want to suggest what should be done. This is the point of view, our editorial on the currency. Stay with us. Welcome back to the point of view. Tonight's an editorial on the currency. The Cedi is trading in the forex market 14 cedis, 80 pesos. This is the most expensive the dollar has been since record started. It's higher than what it was selling for November 2022, around 14.6. People are predicting it's going to hit 16 by end of the year. It's a big issue. What is driving this? The fundamentals are still weak. That's my argument. Inflation, even though it's halved from 54 to 25, is still very high. Debt to GDP has reduced from 93 to 69 by the artificial reduction. We haven't even paid any of our obligations yet. And still, we have a big deficit. Our debt position has not improved. Inflation is high, interest rates are high, and therefore your currency is exposing all of that. We've also shown you that where we are is affecting production. It's going to affect growth. Now let's explain this. The real composite index of economic growth, the various things that are produced every month, it shows you how productivity is in the economy, what we are producing. Composite index of economic activity, how it's growing. It's a composite index, brings together many things. January, don't forget, in January, the exchange rate was 6 to the dollar. It was positive 4.2 growth. February, 4.4. March, 4.6. April, 2.6. This is 2022. May, 1.7. June, 1.6. July, 0.5. It's getting close to 0. Boom, August, negative growth. September, negative. October, negative. Why is this a big figure? This was the time the currency was selling at 14. So that 14 thing, it comes here, tells you that there's a relation between the price of the dollar and productivity in an economy. If the dollar is high, people are not producing. You can't buy your generator. You can't buy your spare parts. Cars are not being imported. We are an import-led economy. That's why that 14 is now telling you the same November. It's not magic. I didn't create it. You get a point. Then you go to December, end of the year. Inflation, Cedi came down to around 12, 11, 12. Responded a bit. January, more wahala. February, more wahala. Still negative. March, April, May, June, July, August, September, October last year before we started recovering. November, December, January. Okay. Now we are in May. The Cedi has started misbehaving again. So the prediction is that this is going to go back to red. Once it gets back to red, GDP growth, problem. So that 14 thing has to be dealt with. That's my argument. This whole thing, a strong correlation with the exchange rate. So we recovered briefly October last year. January, the currency was around 10, 11 B. Now it's gone back to 14. If we don't stop that slide, productivity is going to go back to negative, and we're going to repeat the whole cycle. This is my argument. So we are in dangerous waters. And I think the economic managers must begin to deal with this. I have two suggestions. One of the reasons why the currency recovered when we fell was something Kofi Akka. I interviewed Kofi Akka a few months ago. Kofi Akka is the son of Konkensen Akka. He's a financial economist. He says he wrote an article advising the government to build its reserves. It calls it the optimal reserve ratio. Basically, buy gold or keep your gold. Keep your gold. Because gold is as strong as the dollar and possibly stronger. If you have gold, you can convert it into dollar to help meet your international obligations. Our optimal reserve ratio was 7% in 2017. By 2023 end, it was around 34%. Kofi says, keep increasing that, keep getting more gold into your reserves. It's going to strengthen your currency's position. We don't know why the Cedi has started going back to its pre-December 2022 levels. The suspicion is that we are not buying as much gold as we ought. So we need to go back to the ORR conversation and increase our reserves of gold. So that's the first major suggestion for the economic managers. Go back to ORR. Number 2, Ghana is an import-led economy. But the problem is that we need to increase our exports. But most of our export companies are not Ghanaian companies. Now, I have nothing against foreign companies, but if a foreign company exports bananas, exports fruits, exports gold, and does not retain the proceeds of that export in Ghana,